What a day we are in for. The Nasdaq is currently down 2% pre-market. Amazon is down 4.2%. Facebook is down over 22%. Spotify over 11%. PayPal 2.7%. Netflix 2%. Wow, it's a crazy day, and this is all down to Facebook essentially. The large majority of what has happened today comes down to Facebook. You will see that the Nasdaq is vastly underperforming, even compared to the Russell 2000. Might be an indicator that it's finally time for some of this money to rotate into our small caps again. Hopefully some good news for growth investors. But today's video is not about the crash that's happening right now. It's about what could cause some movement again after hours potentially. And it comes down to Amazon, okay? So we all know that yesterday Facebook reported their earnings after hours. It went terribly. Facebook is a falling knife as of right now. There's no other way to describe it. All the way from $323 to about $248 pre-market. Potentially going to be one of the biggest gaps, if not the biggest gap ever created on the Facebook stock chart. And that's brought down a lot of big tech with it. It's brought down the Nasdaq as a whole with it. Amazon reports after hours today. All eyes on Amazon. You can already see people getting a little bit skittish, getting a little bit scared, taking their money out. Amazon down 4% on no news whatsoever. And what's even quite interesting is that, where are we? 2 seconds. Amazon's estimated EPS is the lowest it's ever been. They've bet on 3 out of 4 of the last quarters by a lot, but last quarter they missed EPS. We've seen companies missing EPS this earnings quarter, destroying them. We saw it with Netflix. We've seen it with Spotify now. We've seen it with PayPal. We've seen it with Facebook. So all eyes are going to be on Amazon today, and it's going to move the market. So what I want to do is talk about it a little bit, speak about their history, speak about the expectations, and we're going to speak about some of these other stocks that have been crashing. And I also want to speak about the potential to see some money going back into those small caps soon, baby. If you're like me and you like free things, especially if they involve free money, hit that link in the description or in the pinned comment down below. Sign up to Moomoo. Grab yourself up to 5 free stocks valued up to $3,500 each. Especially with the markets being this red, I think everybody could do with a few extra dollars going. You know what I mean? Please hit that juicy like button. Drop me a comment down below. Subscribe if you're new around here. And let's get into this, okay? So we're actually going to start off today's video by looking at Facebook and seeing the effect that it has had throughout the entire market today. So just to visualize, okay, from where it closed down to where we are right now, as we know, Facebook is down about 22%. But just look at how much area that takes up on its actual stock chart. All of this here is going to be a gap. All of this price action. It's a new 52-week low, my friends, or very, very near to it. It's pretty much equal in that 52-week low that they spiked down to before. You can buy Facebook for the same price now as you were able to a year ago. That does not happen very often. Now, I'm going to make a full video on Facebook, more than likely today. When you look at the earnings, the majority of it wasn't great. That's simply why it happened. Growth was much worse than expected by all. And that's the reason this sell-off is happening. Do I think it's a bad idea to buy some? No, I am definitely contemplating buying some. Do I think that within 3 days it's going to go back up and fill in this gap? No, it might take a month or two, especially with the markets the way they are right now. It could take many months. Maybe it's going to be next year. But do I also think that Facebook's never going to be worth more than $250 again? No, I mean, it fell out of the $1 trillion market cap club. Look at that. 900 billion market cap, my friends. Facebook's got to get that bread back up, baby. But today is about Amazon, okay? So we saw what happened here. Bad earnings came out, particularly bad EPS. Boom, crashes, okay? Let's take a look what happened with Netflix. Let me get up Netflix for everyone. We can have a quick look at Netflix. Similar story. Bad earnings. Where were we? Right here. Boom, huge gap down. And it did begin to move back up, okay? I had a nice rebound off the bottom. But now, again, it's looking like it's going to start downtrending again. Is it going to fill in this gap at some stage? Almost definitely yes. I mean, how big was this gap yet again? Oh, not Fibonacci. I'll get rid of that in a second. How big was this gap? Yet again, all the way down here. I mean, that was huge, my friends. More than 30%. We saw it with PayPal as well. It's happening everywhere, guys. It really is just rough out there. I mean, oh, look, another drop from, where are we? Like 176 all the way down to 128. It's terrible. And we saw for a long time with companies that earnings weren't really making sense. Good earnings would mean that a stock could go up or down or stay the same. Bad earnings would do the exact same thing. Now we are seeing if companies are missing, they are getting absolutely destroyed out here. Look at PayPal, guys. From the peaks of over $300, nearly down 60%. This is PayPal. If you feel bad about some of your high-risk growth stocks being down 50%, look at the likes of PayPal. You know what? Look at Facebook from 382 to 250, my friends. This is Facebook. Now, on the contrary, we saw Google give their earnings report. And their earnings was decent, but it came with a stock split. And that moved the stock price up. So it goes to show me that, you know, there's probably some money to be made right now if you play these earnings correctly. I think that there's going to be a lot, and I mean a lot of easy money created based off of these huge drops, huge overreactions. Now, again, that doesn't mean it's going to happen in a day or two. We're not playing with, you know, small cap cryptocurrencies here. We're playing with some of the biggest companies in the world. But any opportunity to secure 15 to 20%, if not upwards of 30 to 40% within a 6 to 12 month period on a huge company worth nearly $1 trillion seems like a fairly good bet in my personal opinion. Does that mean it can't go lower? No, of course it can go lower. You know what I mean? I don't think, again, this is a day trade for me. If I am to add to my positions in the likes of Facebook, it's going to be a longer term thing still. And I mean, this is a fantastic point to add to the likes of Facebook. So back to Amazon, okay? EPS is already expected to be considerably lower than where it has been in the past, okay? We have bet 3 of the last 4 quarters, but it was the last quarter that didn't go great, okay? Sales growth is expected to go very well, okay? This was also expected with Facebook, and Facebook missed sales growth by a huge margin. And I also think that is a very large reason for why Facebook stock is seeing this huge sell-off I did. And I also think it's a very large reason of why people won't be willing to just immediately scoop up Facebook, because they missed, and it wasn't just a small miss. There was some good things in the Facebook presentation. Again, I am going to cover them, but there was some things that can't simply be ignored. There was some things that justify not throwing all of your money in all at once. Amazon could have a very similar situation, especially given the last quarter that we saw, especially given everything that was going on with Roni. I don't think anybody knows exactly what Amazon are going to have to say, but they have the potential to move markets either way tonight, after hours. The reason I want to make this video, though, is because people are scared right now. After what just happened with Facebook, one of the biggest, seen to be one of the most safest companies in the whole world, bringing the NASDAQ down pretty much single-handedly a couple of percent, bringing its own stock price down over 20%, causing this ripple in the entire mega cap market. I mean, we are seeing $1 trillion companies trade like penny stocks over the last few weeks. People are scared. And again, that's evident. Amazon down nearly 4.5% before market opens today because people are afraid of a Facebook-like move. That's why I want to make this video. Be ready. I mean, nothing fundamentally changed with Amazon yet. Maybe it will after earnings. But do you really think that these people who are selling right now have a good understanding or a good estimate of what's going to happen during earnings? Or are they just scared? Are they just acting emotionally because of what they just saw happen with Facebook last night? I think that is what is happening here. Or else these people would have sold yesterday, or they would have sold the day before. You know what I mean? This is a purely emotional reaction. What Facebook's earnings portrayed has nothing to do with Amazon. And it's for that reason that, you know, you can quite clearly see there is a lot of fear in these markets right now. So how are we supposed to play these stocks? Okay, well, I made a video speaking about how to make easy money on Google yesterday. And I'm going to let you in on a little secret. I'm going to let you in on the secret to easy money in the stock market is just buy these companies at discounts and hold them for a considerable period of time. Look back through history. Look at Google. Have they ever not made an all-time high? No. Sometimes it takes a while. Sometimes they crash down a lot. But has it ever happened? No. Look at Facebook. Oh, look at 2020 crash. That's horrific. $141. Proceeded to go up to $388. I mean, yeah, maybe you bought at the top at $220. You were like, I lost so much money. You made a lot if you held on. Now we're seeing another huge crash with Facebook. I mean, this is the best buying opportunity anybody has seen for Facebook since literally July 2020, pretty much, my friends. You know what I mean? The same can go for companies like PayPal right now. If you are a PayPal bull, for me personally, there's still a few things I don't particularly love about this company, even though I do use them. But like, it's the best buying opportunity you've had in a long time. They're going to fill in this gap on the chart. Same goes for Spotify. Look, they're down from nearly $400 to 168. Again, for you small cap growth stock investors, some of your companies are outperforming the biggest companies in the world, okay? The markets are in a much worse position than they look. It's been the likes of Apple and Amazon and Facebook and Netflix holding the entire market up. They're all finally crashing, which means that stocks are going to be able to go back up in value soon, my friends. Everything that we're seeing happening right now is offering us buying opportunities. This is the first time on YouTube that, you know, a creator like myself can speak about Facebook and Amazon and Netflix, let's say, and Apple and Google, these more boring companies, and, you know, have people interested since March 2020, since the huge crashes. I think that goes to show how fearful everybody is. Now, am I trying to say that this is the bottom of the market and you should load the boat? No, not whatsoever. I think to say that would be extraordinarily ignorant. But we're getting closer to the bottom, which each one of these massive caps worth trillions of dollars drops 15 to 20% in a day. We are getting closer to the bottom. We are getting closer to having somewhat normal ratios, you know, valuations in the markets again. We are getting closer to being able to make reasonable amounts of money. And you can probably tell I'm getting excited about this, even though I own Facebook. It's crashing horribly, you know what I mean? I own Amazon, and I mean, what? If it comes down to $2,000, am I going to be sad? No, not whatsoever, you know what I mean? If it crashed all the way to $2,000, I think pretty much everybody under the sun would be willing to pick up a little bit. It's still Amazon at the end of the day. And I'm trying to point this out with Facebook as well. Yes, it wasn't the best earnings report. It wasn't the best quarter. They're oftentimes the best time to buy stocks for the long term when there's blood in the streets. And when valuations have been up so high that they finally have to come back down to earth, they generally are going to be the absolute best time to buy stocks. And I bet we're going to see a lot of hedge funds buy today. I bet, you know, in the next quarterly reports from all these guys, we're going to see updates, and they're going to have been buying Facebook and Amazon and Spotify and PayPal and Netflix at huge discounts compared to where they would have only been 2 or 3 months earlier. And again, I want to keep reminding you guys, look at that Russell 2000 down 0.62%, outperforming NASDAQ and S&P. Small caps, I personally believe, are set to rebound quicker than large caps when the time does come, due to the fact that these large caps, you know, haven't crashed anywhere nearly as quickly. So all eyes on Amazon today. If you're like me and you're considering picking up some Facebook, if you're watching for dips in Google to try buy and fill the gap in on the way back up, watch Amazon, see if it leads to another huge day tomorrow. It's a Friday as well. I think it's good that it's happening. Friday, tomorrow will more than likely be absolutely crazy, but then we get to go into the weekend, and weekends traditionally let investors just chill out a little bit, sit down for a few minutes, gather their thoughts, make a bit of a plan. They don't have to react as emotionally as we can clearly see is happening right now with this near 4.5% pre-market move with Amazon. So I think we're in for another 2 crazy days. Facebook's still going down in the pre-market trade. I mean, how many times in history has Facebook had a 20% red day? I mean, it is Facebook. This isn't a penny stock. What is this? This is crazy, man. With Amazon, keep your eyes out for the sales growth figures and the EPS, okay? That's going to be the 2 things that move it immediately in the post-market. It doesn't matter if they come out and have good news, such as Facebook did in regards to some of their advertising revenues and geographical updates and things of the likes. Just keep an eye out for those 2 things. That's what investors are going to be looking towards. Anyway, my friends, I feel like I went on a bit of a tangent there, but there was just a lot of things I wanted to speak about. Hopefully, you know, today's video was somewhat helpful to someone out there at least. I think it might have been. I think making the comparison of these large caps to the small caps and how these large caps are finally getting destroyed will fill a lot of people with confidence and will, you know, help people realize that they're not doing as poorly as their portfolios may well show. Again, look at the likes of ARK, look at a lot of these big hedge funds. They are feeling the pain as well. Most people are. Anyway, guys, if you watch this video all the way till the end, you are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the absolute world to me, so thank you so much. Remember, if you'd like those free stocks, some free money while our portfolios are down, hit that first link in the description or in the pinned comment. Sign up to Moomoo, get yourself some free money. It really is that easy, my friends. It takes a couple of minutes. No reason not to. You'd be crazy not to. Please hit that juicy like button, drop me a comment down below, subscribe if you're new around here. I'm going to see you for another video very soon. Peace.